Did you panic sell the dip? Did you think it was over? Well, I got bad news. We've only just begun. After crashing down to Goblin Town at 60,000 cuck bucks, Bitcoin bounced 10K in less than 24 hours. Actually, it was 11K. It went to 71K. Earnings calls may have been a little painful, but we're pulling double shifts now, baby. Because the most bullish signal of our lifetimes might have just flashed, and it looks like a $30 trillion monster in catalyst for Bitcoin to go absolutely vertical could be upon us. No one is bullish enough. Wait, actually, the bulls are getting bullisher. Nothing stops this train. The big Brent is coming. We have a massive show today. This is where we make our stand.
What is your outlook when it comes to price targets for 2026? Are you going to tune down a little bit your predictions, or you still stick to that $1 million?
No, I've increased it actually to 1.33 million in 2026 because I think we're overdue for a bull run. And I am a permabull, and I don't really see the existing system lasting that much longer. The big volatility and run-ups in precious metals, to me, is the biggest indicator. And that shatters another common myth, which is Bitcoin is too big to 10x. It is not too big to 10x. The increase in gold market cap from 20 to 40 is enough to 10x Bitcoin, and maybe even more. And it shows like the largest asset on the planet could almost double itself in a very short time frame.
If gold can double, Bitcoin can 10x. Damn straight. OMG, Bitcoin down 30%. I'm too scared. Yeah, tell that to your grandpa who watched his friends die face down in the muck. You better nut up and get in the trenches. Because what we're looking at is a rare opportunity. At 62K, the Bitcoin Meyer multiple is 1.5 standard deviations below its 200-day moving average. In all market conditions, just 2% of days are lower. You see what I'm telling you? The Bitcoin 2-week RSI is the most oversold in history. Unprecedented selling pressure. What do we know when we see things like this? We know that it's a massive opportunity and the dip is temporary.
The Bitcoin ETFs are trading 300, 400% more volume than their 30-day average daily volume. So there's a lot of volume, and there's sellers and buyers. So I think that there's different perspectives on the market at the moment, which is one of the most interesting things. I think long-time holders are feeling unsure, and I think the new investor set, institutions, are feeling that they're sort of getting a new crack at the apple and seeing prices that they thought they would have forever missed. So, I was having a conversation with a wealth management firm, a $1 billion firm, earlier today, and they said, we have clients who want to put money to work. Where do you think is the right price to buy? Will this thing keep going further? And I think that's a mindset that's present with a lot of the institutional set.
I mean, you mentioned
even the guy in the suit said it. It feels like, smells like, kind of tastes like. We've been here before, but we didn't have this going on last time, a Fed Treasury Accord. And here's your $30 trillion bombshell. The new Fed chair, Bilderberger Warsh's plan isn't to pay off the debt. It's to inflate it away. Yield curve control means the Fed draws a line in the sand and says rates stop here. And if the market disagrees, they print and buy infinite bonds until it submits. They're printing money to buy printed money. If there was demand for the thing, you wouldn't have to do that. Spoiler alert, it's not a free market. This is the type of thing that happens right before going full Weimar. Which again, we've seen this movie before. During World War II, US debt exploded. Debt to GDP hit about 125%. Today, we're sitting around 121%. Different decade, basically the same math. Back then, the only way the government could finance that scale of spending without interest costs spiraling out of control was yield curve control. Rates were capped. The Fed absorbed the bonds, and the Treasury borrowed basically without limit. That's the playbook, and it worked. Not by paying the debt down, but by letting inflation do the work quietly over time. And let's be clear, those costs don't disappear. They were pushed straight onto the public through inflation. From 1945 through about 1980, the US slowly worked debt to GDP down towards 30%. Not by austerity, not by discipline, but by growing out of it while the purchasing power of the dollar eroded. And that reset is eventually what gave Paul Volcker the room to jack rates up to nearly 20% and finally crush inflation. That's the historical sequence. And it looks an awful lot like the roadmap Kevin Warsh is following. The idea that Trump was suddenly going to nominate someone more hawkish than Powell after spending over a year attacking Powell for being too hawkish or possibly differently abled never made sense. Inflating the debt away was always the plan, and history is very clear on what works in that environment. Hard assets outperform during inflationary periods. Scarcity wins when money is being diluted. If fiscal and monetary policy officially merge, if that coordination becomes explicit, markets will reprice the risk embedded in the dollar as the world's reserve currency. That's structurally bullish for scarce assets, for Bitcoin, and structurally bearish for anyone trying to score long-term wealth in fiat. The era of an independent Fed, quote unquote, may be ending. Position yourself accordingly. They have to print, and you know what that means. Did Saylor just drop a new $1 million Bitcoin call? Does he know what could be upon us? We're about to bring it home today, but before we do, look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a moment to recognize our sponsors powering this show over at the Bitcoin Way. At the Bitcoin Way, they'll walk you through all things Bitcoin, like it's kindergarten with Satoshi. From setting up your first wallet to running your first node and so much more. No tech skills needed. The Bitcoin Way has got you covered. You want $1 million Bitcoin? Better act like it. Self-custody is not optional. That is the revolution. Schedule a free 30-minute consultation with the Bitcoin Way today using that link in the show notes. Today's show is brought to you by Ledn. If you ever need cash without selling your Bitcoin, Ledn makes that possible. The global leader in Bitcoin-backed lending, Ledn has issued over $9 billion in loans since 2018, and they have a perfect record of protecting client assets. No credit checks, funds in less than 6 hours, no monthly payments, repay whenever you want with zero penalties, and proof of reserves reports, verified by a top accounting firm, are published every 6 months. Ledn gives Bitcoin holders a secure, transparent way to unlock liquidity without selling. Learn more at learn.ledn.io/simply. That's learn.ledn.io/simply.
Based on what you know now, what is your opinion about the importance of having clear rules of the road, market structure legislation in the United States?
Look, I think that it's impossible to proceed without it. We have to get this Clarity Act across the finish line, and any market participants who don't want it should move to El Salvador.
So, as a industry, what is the benefit to having this industry embedded in the U.S. economy?
Well, again, as I said, that there seem to be people who want to live in the U.S. but not have rules for this important industry, and we've got to bring safe, sound, and smart practices and the oversight of the U.S. government, but also allow for the freedom that is crypto. And I think it's a balance that is being worked out. It was worked out in the Genius Act, and I'm confident with leadership of people on both sides of the aisle that we can get clarity across the line this year.
Can you see a day when conventional banks and digital asset banking are offering the same types of products, giving each an advantage to offering a broader array of financial products to the American consumer?
I think that can happen over time, and we've actually been working with small and community banks.
Is it a coincidence that all of a sudden Bitcoin is down 50% from all-time highs and one of the most violent and quick liquidation events that have beget the most FUD since 2020 to 2022, right as we're about to cut rates and a monumental crypto market structure bill gets passed. Something to think about.
You can imagine that the banks were afraid to get involved with crypto under the previous administration. You know, getting a supportive White House, a supportive cabinet, a supportive head of the Treasury, and then a law that says that it is legal for you to do this, I think was pretty important. Then that has resulted in an avalanche of institutional adoption, and now you have companies like JP Morgan, right, and Bank of America and Wells Fargo and BNY Mellon and PNC Bank and Citi that are all announcing their support for this asset class. And if the trillion-dollar banks are willing to custody and they're willing to extend credit and they're willing to handle the asset class and they're willing to bank the crypto industry, that's really the necessary condition to 10x from here. Like Bitcoin got to 100,000 without their help, but getting to 1 million requires the banks to bank the asset. And so the next 4-year period is really about banking Bitcoin and the support for digital assets in general by the major establishment of bankers in the United States. And everybody else in the world, right? You can imagine the bankers in Australia, Canada, Singapore, the Middle East, and Europe, Mexico, they all follow the U.S. banking standard. And so what you have is an avalanche or a sea change here, and the headwinds have become tailwinds.
Okay, so that's what got us here. Let's just talk about the short term, 2025 year end. Where does it end up? Because I've heard everything from 100 to 200,000.
Yeah, well, the consensus of all the equity analysts, and there's like a dozen of them that cover our stock, is north of 150,000. Our corporate guidance is targeted at $150,000 by the end of the year.
Right.
Zoom out, stay humble, and stack sats, because Bitcoin is an ego test.
Listen, thinking you're late to Bitcoin is a failure of ego. I'll repeat that again. Thinking you are late to Bitcoin is a failure of ego. Bitcoin is an ego test. Late to Bitcoin, according to who? Oh, you're comparing yourself to your childhood friend. Oh, you're comparing yourself to people on the internet. Oh, you're comparing yourself to your coworker. That's why you think you're late to Bitcoin. What is that? That's a failure of your ego. That's an insecure, small person. All of those, that has nothing to do with Bitcoin. You think you're late to Bitcoin? Michael Saylor just bought $2 billion worth of it. You're late? Where? How? Bitcoin's an ego test. As soon as you can sacrifice your ego and say, I'm not bigger than this thing, I can't control this thing, I am one with this thing is more important than me, it's bigger than me, it's when you become a Bitcoiner. You join the network, you have every single equal right with everyone else on the network. There's no hierarchy, rules with no rulers. That's when you become a Bitcoiner. So I think thinking that you're late to Bitcoin is a failure of ego. Stop comparing yourself to other people. Listen, at the end of the day, you got to put your money somewhere. You got to put your time and energy, your effort, your labor somewhere, right? You get up, you go to work, you contribute to this world. You got to store that value somewhere. You're not going to store it in the best place to store it in human history because you're comparing yourself to your friend? What type of man are you? Come on. So, I don't know. Like, I just don't get that. Don't compare yourself to other people. Decisions are made at the margin. You wake up every day, you contribute value to the people around you. You got to put that value somewhere. Bitcoin's the best place to put that value, period. So there's no top. There is no being late or early. Again, Bitcoin's not a hedge. It's the solution. Every single day that you wake up and you do things for others, you create value for society, and you have to store that value. You put it in Bitcoin, obviously. It's been the correct answer for the last 15 years. It'll be the correct answer for the next 1,500 years.
And the possibility of World War III is higher than ever, which is probably a good time to visit our new sponsor, Sat123. Because when cell service dies, life doesn't have to. Sat123 hooks you up with real satellite phones, Starlink kits, and rugged off-grid internet that works anywhere. Mountains, ocean, middle of nowhere, it doesn't matter. If you care about preparedness, freedom, and staying connected when it actually counts, go to sat123.com. That's sat123.com, and don't forget to use promo code SIMPLY for 15% off. No signal? No problem. What do you guys think? Let us know down below, and don't forget to like, subscribe, and give us a pat by sharing the Sound Money Gospel. Stay tuned. We got a lot of great stuff coming your way. Set those notifications for the best in Bitcoin news delivered to you daily. And I'll catch you all next time. Love you guys. Peace.
If you prefer to go down with the ship, you.